Obviously, we're also keeping an eye on silver, which is also reaching, I believe, record highs. You know, I'm curious. Gold is sort of its own separate thing, but when it comes to a story we've talked a lot about this week, the stimulus in China, for example, silver used in manufacturing and in production, certain production processes. Do you think it's going to have an impact on some of these metals?
In 1964, the same year the United States decided to take silver out of its circulating coinage, and thus began the long road of currency debasement we're still embarking upon, CNBC financial journalist was born, David Faber. He's a typical 60-year-old Western financial talking head that you hear on television. And no, silver is still nowhere near record nominal price highs yet, even though gold priced in fiat currencies, like the fiat US dollar for instance, seemingly hits new nominal price record highs week after week. We begin this week's bullion market update with a fresh example aired today of how little the Western investing world understands either gold and or silver markets respectively, with such price history ignorance on public display all within one human lifetime of facts. The spot silver price is still nominally negative 36% off from its seemingly ancient 1980 and 2011 nominal price high levels of 50 an ounce, finishing this week just under 32 an ounce spot. Many gold price analysts' guesses to start this year 2024 have been left in the dust, as gold leads this global bullion bull market as it should. Yet we're still awaiting silver to begin its typical catch-up rally and outperformance of gold perhaps later this year into next 2025. And while silver market analysts' guesses to start the year have already been outperformed to date in terms of silver spot, there are many calling for higher silver spot prices to close out this year. With such excellent underlying market fundamental drivers of silver, CNBC in India will point out in the next 60 seconds.
I'm looking at precious metals right now, and within that as well, silver finally seems to be coming of age. Overnight, we've seen nearly 3% of gains into this one, and $31 an ounce is back in the international markets there. When you look at the range for 2024, it has been a huge $22 to $32 an ounce. The support comes in on the back of dollar index, which has slipped off its recent highs, and then the markets also have seen support from the run-up in gold, the US Fed rate cut, and the expectation that you would see another 50 basis point rate cut in the next two meetings from the US Fed as well. So when you look at the silver markets as an individual fundamentals as well, this is going to be a fourth year of deficit. The global markets are in deficit in 2024, and also this is the second largest deficit expected in 20 years in this year when it comes to silver. That is where the support's coming in. Silver global deficit, when you look at those numbers as well, has been increasing. 2022 was a record number. Last year was a deficit as well. And for this year, 215 million ounces of silver deficit in the global markets is anticipated. When you look at the silver demand, well, that is anticipated 2% higher as compared to last year. So we're looking at 1.2 billion ounces of demand expectation for this year. When you look at the global silver industrial demand, well, that has been increasing as well. Last year was a record 654 million ounces. This year is a record 710 million ounces of an expectation as well. And with all of that very strong fundamentals where you have a deficit and record demand expectation, the outlook for silver has been quite bright as well. These are the reports that have come in from global banks and brokerages. Citi expecting $35 to $38 an ounce of a price in next 12 months. UBS talks about 34 to 36 by the end of this year itself. And JP Morgan talks about an average of $36 an ounce in 2025. So from 31 currently, the expectation of silver prices going further high is quite high.
All right, so not just gold, but all that glitters can also be silver, as those price targets tell us. Thanks very much for that, Manisha.
In terms of record nominal gold prices ongoing, of course the market might be getting a little bit ahead of itself, a factor we'll examine later in this week's update. But by simply looking at the US government's rigged CPI since the last time gold cleared the system in 1980, we still need nominal price highs of spot gold of nearly 1,000 an ounce more in price before clearing the last nearly 4.5 decades of inflationary data lies compounded. The long-term truth is gold is destined to go much higher than that in nominal fiat US dollar terms. On the silver side of the last 4.5 decades of inflationary lies compounded, we still need a nominal price of spot silver just north of 170 an ounce to simply match the underreported inflationary high of January 1980. Again, my contention on this channel that silver in nominal fiat US dollar terms will climb even higher than that before this mania phase fully peaks out. If indeed monetary precious metals become the last bubble of this post-World War II debt supercycle era, the fact that Western media talking heads don't even have their facts close to correct is simply a current anecdotal of just how early we truly are in this. The biggest bullion-related financial news this week was the return of Chinese stimulus and fiat currency creation to the tune of upwards of 1 trillion fiat yuan to help bolster its struggling banks, local real estate, and stock markets. Barring any deflationary collapse scenarios, this kind of reckless, arbitrary fiat currency creation is destined to continue fueling silver and gold spot price speculations higher over time. Even Reuters is having to admit that the potential for silver to have a solid close to this year seems more probable by the day, and random trillion fiat yuan bailout measure announcements ongoing. Article reads, China stimulus, mighty gold puts silver on a streak, but not without risk. Silver prices have bubbled up to their highest in over a decade on the back of bullion's stellar bull run and Chinese stimulus measures, although some analysts expect the rally to fade as industrial sector demand remains a concern. Spot silver, both an investment asset due to its relationship with gold and an industrial metal, rose to $32.71 per ounce on Thursday, its highest level since December 2012. It's gained more than 35% so far in 2024, leading the precious metals complex. China's central bank unveiled its biggest stimulus this week since the COVID-19 pandemic, an expected cut to its 7-day reverse repo rate. The U.S. Federal Reserve lowered interest rates with a 0.5 percentage point reduction last week. Quote, China's stimulus is giving industrial metals a boost, something silver traders have been waiting for, Ole Hansen, head of commodity strategy at Saxo Bank, said. Continued gold strength, combined with stable to higher industrial metal prices, should see silver continue to outperform gold, with the gold-silver ratio falling back towards the 70 to 75 area, potentially driving a 10% outperformance in silver, Hansen added. The spot gold-silver ratio, denoting how many ounces of silver 1 ounce of gold can buy in spot terms, is used by the market to gauge future trends, as it indicates silver's current performance against its historical correlation with gold. Quote, interest rate cuts should provide a bullish impulse for global activity and support silver consumption. We see prices rising 35 over the next 3 months and 38 over the next 6 to 12 months, Citi analyst Max Layton said. McGuire, which expects that silver market deficits will persist throughout its 5-year forecast window, said investors are likely to remain key for near-term price action, with ETF holdings arguably offering the greatest scoop for support. However, consolidation in China's solar industry and slower growth in the world's second biggest economy could pose headwinds for silver in the near term. Quote, China's newest support measures on their own will probably be insufficient to drive a turnaround in growth, and traders do appear to be overestimating the likelihood of another 50 bips cut by the Fed in November, said Hamad Hussein, assistant climate and commodities economist at Capitals Economics. According to rally in silver prices, it's unlikely to be sustainable over the next few months as some of the tailwinds boosting silver demand fade. In top consumer China, industrial output growth slowed to 5-month lows in August, underlying weakening domestic demand. We believe that silver is primarily dependent on gold in terms of its medium to longer term performance rather than any silver market specifics, said Karsten Minke, an analyst at Julius Baer. On the other side of this break, we'll look at the continued bull market in gold and when might silver supply deficit fundamentals propel spot prices higher to come.
Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates.
And be sure to visit sdbullion.com/sweepstakes to enter our free 500-ounce silver coin giveaway.
The history of gold is vast and deep, and history is important. Part of a group with over 170 years of history in precious metals, Arger Heraeus has a proven track record refining some of the world's highest quality gold products. As one of the world's leading gold refiners, Arger Heraeus is on the forefront of cutting-edge technology. That's why when SD Bullion was looking to make a gold bar of the highest quality, we chose to partner with Arger Heraeus for their rich experience and history. Our goal was to create a bar that visually expresses some of the core values at SD Bullion, our love for our country and our faith. Introducing the brand new Cross and Flag Gold Bars, featuring a beautiful image of the American flag draped around the cross, imprinted upon 4 nines fine gold. These bars are available in 4 different sizes, and each bar arrives in assay with a unique serial number. Serial numbers 1 through 20 for all 4 size options will be available for purchase while supplies last. A separate listing for serial numbers 21 through 100 will also be available, and all other serial numbers will be shipped at random. The SD Bullion Cross and Flag Gold Bars, the first co-branded gold bar in SD Bullion history. And history is important.
So I went down to the water and found my fate, because I don't wanna be stuck in the good old days. That's when you say, I swear you ain't seen nothing yet. Water and found my faith, bowed my head for the blessings that come my way. There'll come a day, I swear you ain't seen nothing yet.
Exclusively at sdbullion.com.
The spot silver and gold markets were both up on the week, with what appeared to be some profit taking to close the trading on this Friday. The spot silver price finished at $31.61 an ounce bid, while the spot gold price closed at $2,653 an ounce bid on the week. The spot gold-silver ratio finished at 83, and we'll continue monitoring the spot GSR to see if it lowers to the lower 80s and perhaps back into the high 70s, as technically that's what appears to be coming. The handler of the Federal Trade Commission, or FTC's Twitter account, had an embarrassing tweet corrected this week. Apparently, the agency was trying to warn its followers about real ongoing scams in the USA, where phone call scammers pretend to be agents of the FTC and talk unsuspecting victims, often elderly, into buying gold bullion, silver bullion, or Bitcoin so criminals can then make off with the goods. The FTC tweeted, quote, "Anyone who tells you to withdraw money and buy gold bars to, quote, protect is a scammer. Learn more." Twitter followers piled on, pointing out the fact that the fiat US dollar has declined about 50% against gold over the past decade, so simply communicating that fact does not make one a scammer. Gold bears are out this week with a chart banging the table that spot gold is currently historically overbought versus its ongoing 200-day moving average, currently 2 standard deviations higher. And while that is true, gold can and has gone on runs where it has more than doubled on a percentage basis how far it has climbed above its 200-day moving average, currently I believe 17% above, but there have been clips in time of 40% spikes or higher in terms of percentage. Both the 2000s and the 1970s gold bulls saw major runs larger than the one that we're currently on, although given how nominally large the spot gold price number appears to normie onlookers out there, you can see why caution is being called for. This coming week, China will be closed in gold trading for a national holiday, so if there were to be any bearish price breakdown opportunities, maybe this week would be a good idea to be adding to positions. This coming week might just offer that opportunity to bullion buyers. Underlying pressure for silver supply continues slamming the global silver market, and the float of available silver in London is certainly shrinking to levels that will at some point have real price discovery effects for soaring silver values. A large swath of India's 45.6 million ounces of August silver imports recently came from dwindling London warehouses, and judging by silver lease rates ongoing, the silver market has been seeing tightening physical market conditions, especially over the last 3 years of large silver supply deficits, which total in the last 3 years, and this included, estimated about 500 million more ounces of silver demanded than supplied by the global market. And there is no real sign of red-hot silver demand factors slowing anytime soon, especially industrial and potentially even as investors come momentum piling into this trade. As they see gold performing so well, they'll try and pile on to silver to get some beta. As for silver spot prices, currently we're hitting 12-year nominal price highs, inching up to perhaps the biggest cup and handle eventual blowout the financial world has seen globally in this scale. That is going to be all for this week's SD Bullion Market Update. As always to you out there, take great care of yourselves and those you love.
If you enjoyed this video, hit the like button and share it with those you love. Subscribe to our channel and hit that alert button so you know when we publish new bullion market updates.